Happy New Year and welcome to the first episode of Nucleus Investment Insights for 2021. I'm Shelley George, Head of Operations at Nucleus Wealth, and I'm delighted to be here filling in for Tim while he takes a well-earned break. Wishing you good weather, Tim. So today we're going to be looking at cryptocurrency. Bitcoin rose nearly 300% in 2020. Excuse me one second. Excuse me while I get interrupted by my poor technology settings. I think they have been fixed now. Rough start.
Shelley.
Yeah.
Go again, Jaden can cut it out from there.
Okay. Happy New Year and welcome to the first episode of Nucleus Investment Insights for 2021. I'm Shelley George, Head of Operations at Nucleus Wealth, and I'm delighted to be filling in for Tim while he takes a well-earned holiday. Wishing you good weather, Tim. So today we're going to look at cryptocurrency. Bitcoin rose approximately 300% in 2020, and it's already up another 20% so far this year, recently trading at 35,000 US dollars per Bitcoin. So the obvious question I have then is, how high can it go, and should I be investing in it? So joining me to answer these questions and more today is Head of Investments at Nucleus Wealth, Damien Klassen. Hi, Damien. Happy New Year.
Thanks, Shelley.
So actually, Damien, before we jump into today's topic of cryptocurrency, we've obviously had the news this morning that the Democrats have won the runoff election in Georgia, both seats for the Senate. So that means they're going to have control of the Senate as well as the House of Reps now. And I was just wondering if you can quickly run us through the significance of that for investment markets.
Yeah, certainly. Look, I think it's very significant. I think post the financial crisis, one of the issues a lot of economists who sort of adhere to what you call Keynesian, which is basically getting out when the private sector is pulling back, that the public was saying that the US needed to spend more to recover more quickly. And that was very much held back. The Democrats wanted to spend the money that was held back by Republicans, and we sort of had a pretty muted recovery. It was always, it was good recovery, but it was never got back to the stages where they could actually start raising rates, and it was never got built up a strong enough head of steam. And we'd sort of put that down to one, the stimulus not being big enough, and then and secondly, inequality. And we think that the Dems will address both of those. And I think there was the possibility, if the Republicans kept hold of the Senate, was that they would sort of stymie the relief efforts. And so quite good for earnings for companies and economic growth over the next sort of couple of years, over the medium term. I think in the short term, it's a little bit of a negative in terms of there'll probably also be corporate tax rates will probably increase as well. So it's a little bit negative and positive, but we think the positives outweigh the negatives. So yeah, I think there's still a fair bit more to come in terms of seeing exactly how much gets followed through on. But probably the main one I'd come back to is that the value rotation, which we saw in November, it certainly looks set to continue. And we've been over the last couple of days, over the last week or two, as the polling started coming out pretty firmly in favour of the Democrats, we started just increasing our weights to that value trade to make sure that we got some exposure to that. So we do think there'll probably be a bit of a short-term bounce in interest rates and a bit of an inflation scare.
We saw that already last night, didn't we?
We did, yep. And it was it's been that was part of November's one as well. But it's basically what the trends you saw in November extended, I guess, is what we're expecting. Although we're not expecting that to last for longer than 6 or 12 months. Like we think that'll fizzle out. Unless the stimulus happens to be a lot bigger than anyone's expecting.
Okay, thank you. And so let's move on to today's topic. So the agenda, I think we've got up there. We are going to start with a brief introduction of cryptocurrency, its history, and the technology that enables it. And then we're going to look at how to value it and what its value is. And in order to do that, we'll also discuss what exactly money is. So kicking it off, Damien, can you explain what cryptocurrency and Bitcoin are, and are they the same thing?
No, that's right. So definitely not. I think so. There's the cryptocurrency is effectively a way of encoding encoding transactions so that they're relatively safe to do over the internet, and it's all about trying to keep records that people can trust. And so we're going to talk a bit about the blockchain technology and some things behind that, and it's important to sort of differentiate that from Bitcoin, which is just a type of a cryptocurrency, and it's got a number of advantages in terms of being the first mover, but it's actually got a number of quite structural flaws in terms of its design. So as you'd expect with sort of the first iteration is you don't get it right first go, and so it's in a sort of strange position in that it's the highest profile, but it's a it might not be. It's got a number of structural flaws into it, which you would think over time will start to show.
Okay.
So maybe we can jump into the technology side. So I think starting slide 3, we start to get into what blockchain is. Effectively, and I'll try and just to keep everyone on, keep you listening. I'll try and be relatively quick through the technology and the side, so we can actually get to the investment side and what it actually means for Bitcoin. And it's actually worth noting as well that part of the reason we've done a few Bitcoin ones 3 or 4 years ago. We did a few podcasts, but there's been this huge renewed source of interest in Bitcoin, and we're getting sort of more questions than ever, I think, from clients about which is why we thought worth sort of doing a bit of a recap of this. So the blockchain side is really, it's about trying to verify a transaction. So if you're going to make a transaction with a bank, the bank verifies you have the money, and then you're allowed to transfer that money across to a merchant. And that's it. That's this idea of a centralized network. So the way blockchain is really about recording these transactions and having a distributed record where you don't actually need to talk to the bank. You can talk to other trusted members of the network, and they will let you they will help you verify that transaction. And so what that means is you can sort of distribute the transactions across a range of different areas. You don't have a single point of failure, and it means that you can run a currency system with enough people that if somebody tries to put a fraudulent Bitcoin transaction through, that's not going to get verified by the whole network, and so it might make it to one node, but then that node checks versus the other ones and can't find it, and so it's not a verified transaction. But the main idea.
So just on that, is each point or node, as per the diagram, does that have the entire record book on it, or is there some record over here and some over there? And
no, it does, and which is why. And sorry, different blockchain works in different ways, but for the Bitcoin, part of the problem is it's getting very big in terms of these transactions, and that's one of the issues with so many transactions having to go through nodes is that they update that. The process to update a new transaction is actually quite technology heavy. And so, so that's one of the issues with it. So, and there's lots of different other ways of blockchains used, but the main idea with the blockchain is it doesn't have to be a single. You can have a distributed version, and it's basically places that are keeping up that are verifying records and allowing you to move. So then you get to Bitcoin. So on page 4 of the slide deck. So in terms of the Bitcoin side, so they've got this first mover advantage in that they were the first one there. They've got the most amount of money and the most transactions happening in it, and so it gets the most headlines in terms of that. It does have a very limited supply. So basically, the structure of Bitcoin was set up to basically make the issuing of people can mine new Bitcoin, so you can create new Bitcoins, but it gets progressively harder. And takes up more and more computing power to do so. And so basically you have to do a bit of sort of meaningless work in order to create a coin, basically prove that you're there's basically a proof of that you're doing work to actually create a new coin, and that proof gets progressively harder so that the whole system doesn't expand. And so that's one of what Bitcoin's ideas was, very much that they wanted to limit the number of these coins that could be out there. The issue though is I've got on there that's the issue with power usage. So they think roughly, I mean it's hard to estimate, but there's a few different places that do it. I think it's Cambridge in the UK that have some estimates out there. They estimate that if you took that the Bitcoin's taking up about 0.2% of the entire world's power supply at the moment. So basically, for every 1 in every 500 sort of kilowatts that gets used is used just to create or just out there to mine Bitcoin, which is an incredible statistic. As a country, it would be pretty close to 30th in the world in terms of the size of the power that it's using. It's estimated that if you want to buy
now, right, at the current number of issued Bitcoins, which is how much,
off the top of my head, it's in the 20 millions, but it's
So
I guess the issue is
21 million, so we're almost there.
You're close, yeah, but the issue is more about, as I said, it gets progressively harder, so it's an exponential, and also it's an issue with the transactions you're doing as well. So I guess with relatively few transactions and without the whole world trying to use this as a currency, you're already using this. Like it's estimated that if you wanted to buy a cup of coffee using Bitcoin, it's going to cost more energy for the transaction than what it's going to cost to actually heat up the milk or the water to create your cup of coffee.
Wow.
Like it's not structurally designed to be a global currency.
Okay.
And so and the number of transactions, it's in the tens of thousands of numbers of transactions per minute you can do, but it's not in the Visa and MasterCard are like multiples higher than that. Like you got to add a few extra zeros to get to levels where they can actually handle running, actually being a coin that you could use for transactions.
Okay.
So sort of had there's this blockchain technology. Now we've got this Bitcoin, which is just one type of blockchain, and there's some relatively fundamental flaws in terms of the way it's set up. Having said that, there are lots of other different types of cryptocurrencies, and there's thousands of different forms, and some of them are even set up as a joke, just to show that to show how ridiculous the system is. And some of those coins that were set up initially as a joke to show how ridiculous the system is are now actually highly valued and out there as now being treated as a real asset. So a lot of these do actually solve some of the issues that we had. There's also some Ethereum in particular has got some quite novel ways of solving solving contractual issues, and sort of basically like a semi-escrow service effectively. So lots of benefits. And the technology and a lot of these will can solve the problems that you have with Bitcoin. So I guess the overall, without going too much into detail, I guess whatever technological flaws you can come up with certain ones, that they are solvable. So that sort of comes back to the question about then, well, what is money? So that's this idea about, so we know this is new technology out there. Bitcoin's one of them with a bunch of problems, but there's other crypto strategies that do actually have could actually solve sort of the world's problems. So the question is, okay, what do we mean by money? And typically there's basically four different types, four different needs for money. One is as a medium of exchange. So the idea is with this is, I produce something and I want to sell that for something that somebody else has, and so I need to work out what the right exchanges are, and so rather than bartering, we're using that as a unit of account. So we want to try and keep track of what people have been doing, and actually and how much how much wealth they're gaining, and how much work they've done over time. This store of value, somewhere that you can actually you want to have a benefit. You want to be able to keep your assets somewhere and not have that erode over time. And then finally, this idea of a standard of deferred payment, so that as a generally used for debt, more for debt. So if you want to go into debt, how are you going to assess that, and how are you going to judge that? So it's and Bitcoin in particular sort of has tried to be some of these things, but it's really coming down to a store of value at the moment, because as a medium of exchange, it's actually quite difficult, and probably the days of people buying pizza using Bitcoin, I think are far gone. It's probably used still for some transactions where there is a high need for secrecy, or potentially illegal transactions. So that's there's still some uses of a medium of exchange, but it's not really a broad one. And really, it seems to have focused on this whole idea of this store of value is where most people are looking upon Bitcoin. It really is an investment now, as a speculative investment. It's pretty hard for it to be a unit of account because it is volatile, and so managing to keep track of what's going on. Okay, so that's so got this broad idea of what money is. The next step is the next thing you should know about is what you call fiat money. In terms of fiat money, what this is basically money where it's been declared so by somebody. Somebody said this is money. It's not actually there's not actually any part of value within that itself. So traditional money is that we get, sort of banknotes and coins. There's no real value to an Australian dollar bill or a US dollar bill, except for the fact that the government has said that they will accept tax payments in those, and that's that's an acceptable form of currency. So
the real difference, like for me, in that I think is worth noting, is obviously we used to have gold, which did have intrinsic value, which paper notes don't. Right? Is that?
Well, yes and no. Gold's got the same. Gold, they often gold's not. Gold isn't a fiat money, but you're right. But it's now let's leave it at that, because I'll deal with gold in a little bit more detail later. There's a valuation aspect to it as well, in terms of
which can change, but
how much value is associated with it being a currency, and how much value is associated with it being a practical industrial use. But so fiat money, you need trust for fiat money. You need to be able to have you can only accept a paper for transactions or for doing work if you understand if you expect that will actually be around. So what would end up happening is you'd have these runs on banks. So banks would create their money, and you'd have runs on banks, or you'd have people with different currencies, and you end up needing these central banks created in order to make sure that you manage that trust. So I could create my own currency tomorrow, but unless you trust that I'm actually going to come up and actually redeem on it when you want, I'm not going to sort of run away at the last minute, then that currency is really not worth anything until you get that trust. And that's where central banks sort of step in terms of banks, in terms of traditional systems. Within cryptocurrency, you really need trust in the system. And I think that's the whole, that's the Bitcoin advantage, is that it's built up this trust, whether the trust is justified or not, but it certainly has managed to build up that trust, which allows it then to be that, preeminent cryptocurrency. So, the cryptocurrency, it's really a battle of stories, which we'll get to in a minute. But at the moment, Bitcoin sort of got that first mover advantage and the size advantage, in terms of it's got more trust than other cryptocurrencies, which is why it sort of ends up being the top one. And it's a little bit of a circular reference, because to get that trust, if you've got the trust because you're the biggest, means that you can then even get bigger and so forth.
And so, do you want to just actually quickly explain runs on banks, how they come about? And I think it seems to me they don't happen as often as they used to.
No, that's right. And the Federal Reserve in the US and other central banks around the world were informed in part to stop runs on banks. So banks effectively take deposits from people and then lend those deposits out to others. And if the people who they've taken deposits from all of a sudden want their money back, then they can't get it because that money's been lent out to other people and they need time. And you end up with a banking panic where a rumor starts that the bank's going to go under, and so everyone wants to try and pull their money out, and that whole process of people pulling their money out actually becomes self-fulfilling, and the bank does go under. Whereas, so what happens in these cases is the central bank just steps in and just delivers all the money, and then collects on the loans as they come due, and generally ends up winning in that process. So the idea is that you create those banks you create those central banks to stop the runs and to provide that trust. The issue with cryptocurrencies is you got to rely on the system, and that it can't be hacked, and it can't, that everything they set up in the initial stages will work forever, and that because you don't have a central bank that's going to step in to save you if something goes wrong.
Yeah. Okay, thanks.
The other thing in terms of fiat money is and cryptocurrencies is they need real money to keep these things going, because they don't have the central bank or anyone behind it in terms of backing it. Is they need that other investors need to be in there. So if you want to take your money out of a cryptocurrency, you need another investor to come in and give you real currency in order to get your money out. And so because exchanges need your money, it's basically that's part of their job is to get out and advertise and find new investors and find more people that want to invest in these things, because the idea is that if you've got one of these systems going, you need to keep feeding it more and more real cash. Otherwise, the value of these currencies will fall. And so it is really this story of the trust part of this is integral to Bitcoin's whole story.
So that's why they need more money, isn't it? Because they need to get bigger.
Yes.
Do they actually need? Do they need the price of the currency to go up, in the sense that at the start I talked about Bitcoin has risen to $35,000 per Bitcoin? Does that exchange rate need to increase as part of this trust and size? I guess theme.
Well, you need to make sure you've got money coming. So when people want to take their money out, you need to have other people to put their money in. And the best way of doing that is to convince people that they're going to make lots of money from this thing. So, because the question is, if I said to you, Shelley, hey, I've got this new cryptocurrency, nobody really trades it much, but trust me, if you stick some money in here, you give me $10,000 now, and you'll get back $10,000 you get back $20,000 in 10 years' time. It's a lot harder if you can sort of sorry, actually, I've probably worded that badly. You need to know that there's enough volume happening that when you want to get your money out, you can actually get it out. That this is actually a liquid asset. Because if you're putting money into an illiquid asset, then all of a sudden you need an extra premium on terms of that. And so I guess part of the whole story of Bitcoin is why it grows on itself is the more people that come in and want to give money, then the more old people who are in there can actually trade out and get their turn it into real cash, and then sprout their stories about what a great job it is, which then brings more people in, and the next set of people get to cash out, and it's that whole So
it's really about having like, I guess I'm thinking about the liquidity that you have on stock markets. It's really about having a really deep pool of willing buyers and sellers in there, so that when you want to convert it, if you do, that you can do it. And the money doesn't actually go into some pool that is that exchange. It just sits at the participants who are on trading on that exchange, and it's exchange between participants. Like if I want to buy Bitcoin from you, then we agree basically between ourselves what's a fair price, and if you want to sell it for too much, you can go and find someone else who maybe wants to sell it for less. Is that the sort of thing?
Yeah, but my main point with this is it can go in reverse as well. So once people start to move out of it and once you stop getting new investors coming in, and now you have to sell to existing people, you can get the run in the opposite direction, where once it starts to fall and people are like, oh, gee, the Bitcoin's falling, maybe, and if you get a narrative that takes into, starts going the opposite direction, then you lose your new people buying, and then you've got to chase people even further down. And so, it's
part of that problem, because that's basically sort of like mention trays either way, is part of that sort of that it's, I mean, I'm probably getting ahead of us and we're going to get to it, but that it's hard to value. And so, or hard or impossible, I'm not sure. I'll be interested to see where you get, but there's no way to say externally, or it's difficult to, this is the value of it. Therefore, as an investor, I'll step up and take it when other people want to sell it.
Yeah, well, that's right. So as a value investor would say, well, I'll wait till it gets to the level where I can see that the income I'm going to earn from it will justify, regardless of whatever the share price does, what the actual price of it does, I'll be getting an income that I won't actually care whether I need to sell out my capital or not. And Bitcoin doesn't have that.
Yeah.
And it's the same with
have that same problem of they don't really represent future cash flows or tangible, or it's just Bitcoin.
Oh, most of them have the same problem. Okay. Yeah, there might be ones that give you some sort of stream of income, but yeah, there's must admit I'm not conversed over there's literally thousands of different types out there now. But yeah. The okay, so we've got this idea there's this fiat money issue and the whole trust part. And so and then the last part is the second last part. So is talking about sovereign digital money. So there are a number of places out there that are trialing sovereign digital money. Sweden is in the middle of an e-krona trial. It finishes in February. China just finished a $300 million trial. In the UK in particular, the central bank's quite supportive. They've been writing papers about it. Even Australia, Netherlands, I've got a bunch of other banks up there that are sort of central banks have been considering it. It's worth noting that these are different to your cryptocurrencies and your Bitcoins. Effectively, it's using the same type of technologies and they've got the same types of benefits. But the big issue is these are from an authority which is certifying the currency in terms of saying they will accept it, and it's a so while you've got a lot of the positives from it, what they're flipping around is to really bring back that trust issue and saying, okay, well they're going to be the trust and the issuer of these and the person who stands behind them. So and where that leads us to is saying, well, there's two concepts, and I need to keep Bitcoin into mind. Is there's a technology concept, and we said, okay, well, the technology is quite good, and we're going to leave. There's some flaws in Bitcoin in itself, but the technology in itself is can solve whatever problems that happens to have with any one currency. The real important part though is this idea of private money versus public money. So we've got these sovereign digital ones, which are sort of backed by governments. Now there's this idea that, well, what is the money that Bitcoin's created? And it's really private money, and private money is not a new thing. So if you go to Disneyland and you buy yourself Disney dollars and you use those to shop in their shops and buy things, that's private money. Frequent flyer points are effectively private money. An airline has issued me with these frequent flyer points or dollars or whatever you want to call them. It's really a different type of money. I can go and try and sell my frequent flyer points to other people, or I can cash them in for vouchers from the airline. But the net effect is I've got to trust that airline is actually going to give me those points when they come due, and that airline.
I think that's a really good point and a really great way of explaining that issue before, is that because frequent flyer points can disappear. There was a lot of questions last year with Virgin restructuring whether or not their frequent flyer points, I can't remember what they're called now, people are going to continue to be entitled to them.
Yeah.
Or they can also change the exchange rates, like what is a point worth?
Exactly. They can just overnight, they can say, okay, well now they're 20% less than what they used to be. And so and so that really comes back to remembering, what you're getting from Bitcoin and other cryptocurrencies, depending upon who's issuing it, is private money, and it's not a and that's happened right throughout history. So in the 1800s, individual banks were given a charter to create US dollars. And so they would actually, they would actually create the money themselves, and you could have a run on the bank because the bank had created this money, and then you got the run on the bank, and I think the average age of banks was sort of they'd only last 3 to 5 years because they kept on having these runs on them, which is part of the reason for then creating other ways to back the system. And so the idea that we can create private money and then it has problems and then we create other things to try and solve those problems is not a new problem. We've been through that over hundreds of years, and it's really, this is just a digital version of the same thing.
But both of those ideas that we talked about with the frequent flyer points of, okay, they could disappear or their value could change, they can still theoretically happen with central banks. And I can't think of any examples to hand right now, but there are certainly, instances of small, maybe less economically stable countries where there have been issues with the things that central banks have done with currency.
Absolutely.
Maybe Zimbabwe is an example of where they were just sort of freely issuing it and the value got lost. So, the issues with private money are or not specifically to private money, but you don't see them in some of the really major public currencies because of, again, this trust that you say, which the central banks, and I guess to some degree, maybe this social construct that citizens have with their government and the systems for stability.
Yes. And then the idea is we've tried to create independent. So we created central banks initially, and then and they were sort of beholden to the governments. And then the idea is we separate them out as independent central banks, so that there's this level of oversight, and you don't have politicians mucking around with it as much. Like there's lots of different processes public money has been through in order to try and keep that trust part, because when people lose trust in the currency that they're in, as you said, places like Venezuela, where then people start trying to use other currencies, whether it's US dollars or gold or cryptocurrencies or whatever it is, they try and use something because they've lost faith in their own government. Yep. And so that's these the idea of these 4 challenges I've got up on screen as well, is that so you need this belief and confidence. So we've already spoken a fair bit about that. Distribution. So one of the problems with private money in the old days was it was hard to distribute into geographically large areas. So certainly cryptocurrencies have got that. That's fine. They've got the distribution down pat. The volatility side is where they start to fall down. So that it is a problem when your private currency is worth different things on different days. So at least my frequent flyer points, as you said, they can be devalued and companies go broke and everything like that. But in a normal scenario, I know that if I want to get a frequent flyer flight from Sydney to Melbourne, it's going to cost me X hundred frequent flyer points. It's not a matter of saying, okay, it might cost me 400 one day and 450 the next day and 330 the following day. Yeah. So that volatility part does need to be kept in mind. That sort of to be a currency, Bitcoin's struggling with that part, which is why it sort of ends up being now classified very much as an asset, as an investment asset by most people who are pitching the story, as opposed to something you're actually using as a currency. And then the final thing is this whole idea of capitalization and sovereign backing, and the idea that, look, when you most need it, will it be there? So there's an idea, there are a lot of people who talk about owning cryptocurrencies in case of the breakdown of society and issues like, or if you end up with it in Venezuela or somewhere like that, where you've got huge inflation and problems with buying stuff with your own currency, and so you need some sort of external currency that you can trust. Is that the Venezuela sort of then cracked down on people using Bitcoin? Is the idea that, well, you had Bitcoin but you couldn't use it. So the idea that when if you've got an asset and you're trying to save it, you want to make sure that asset is, if that's there to protect you in times of crisis, you want to make sure that asset will actually be available in times of crisis. Yeah. And the idea that could Bitcoin at some stage be hacked in terms of the system and coins fraudulently created? It's very, very difficult, and it's certainly managed to hold up so far, but it's not impossible that could happen, some 5, 10, 20 years in the future with greater computing power. And so that whole idea that you've got that sovereign backing, or you've got the backing of another entity you can trust, whereas that obviously doesn't exist for Bitcoin. Climate change is obviously another issue. So, you know, will at some stage, you know, we end up taxing energy more heavily, and or is it worth, you know, if you could say to some of these people, you know, if now it's whatever it is, 0.2%, if it ends up being 2% or 3% of the world's energy usage, you know, it obviously reaches a stage where you say, well, for climate change purposes, if we can cut that out, then that's a huge win.
Yep.
Terrorism. I mean, the other big risk, I think, main risk with some cryptocurrencies is that is really how big they are in terms of at some stage. We'll go into this a bit later, but central banks might be interested. But other regulatory authorities, you know, if you had a big, say, terrorism attack in the US and it was funded by Bitcoin across various networks, then might there be a reaction where politicians come out saying that they need to ban Bitcoin or drastically reduce its use in the US? Yeah, I can see a scenario where that might happen. You know, I guess there's that whole idea of if you lose money on Bitcoin, there's no one for you to turn to. You can't turn to someone to say, "Yeah, come and help me with this. I've lost it." Whereas, you know, with centrally managed economies and with public money, you know, there's usually some sort of higher authority you can appeal to for the issues. So the valuation part. So, okay, so we've sort of been through the part, what is money? And we've got this idea there's a public versus a private, which is very important. So Bitcoin is a private currency, and there's a technology part behind it. It falls down on some areas, but, you know, those technology problems are solvable. To me, the real issue is, will people allow there to be private money out there? And while it's relatively small, I think governments are happy to have people with frequent flyer points or with you know, Disney dollars or whatever it is, these other forms of currency. But once they get large enough, then it becomes an issue. And you see in countries in crisis where they do start putting limits on what people can do, and they want to put currencies controls over whether people can move money in and out of their own currency. And so you know, cracking down on things like Bitcoin and is going to be a favorite from governments. So the idea on value, though, is that it's all about the story. You could create a coin, or I can create money tomorrow, create another cryptocurrency. If I can get a better story than everyone else's cryptocurrency, then I've got a chance to actually get people to step in and use the currency. And Bitcoin's real strength for me has been their story. It's sort of varied. So the first one was all about this whole anonymous part and the transactional part, and that sort of gradually filtered out. You know, it's this whole idea it's a financial asset that you're going to give you all this value. That's spoken about as being a hedge against inflation. As central banks keep issuing money, you know, Bitcoin's set up so that it can't keep issuing money. There's this whole idea about disintermediating traditional finance. If you don't trust banks or you don't trust the government, then you know, it is a little bit weird to me, this argument. But there are people who then go, I don't trust banks, but I do trust some digital currency I don't understand the workings of and was created by somebody else and is managed by the internet, but I trust it. In a low interest rate environment, you know, gold, it reduces the carrying cost. And so is Bitcoin just another version of gold? And that's got a very good story to it. And this whole idea of institutional involvement. And so I guess that Bitcoin's real strength is Bitcoin's real strength is that the story changes depending upon who you're talking to. Is you can just adapt your story to somebody's really concerned about banks and what they're doing. Oh, great. Well, we're going to tell you about, you know, how it's disintermediating traditional finance and etc. Somebody's concerned about inflation. Okay, well, great. Here's your hedge against inflation and central banks. You want somebody who's got it looking for, you know, all the aspects about gold. It's like, oh, here you go. It's a new digital gold, or you know, this rush of money. This idea that as institutions get involved, and they are starting to get involved, then the size of the asset isn't very big. And so if institutional money wants to come in, then it's going to push this price, you know, to hundreds of thousands of dollars.
It also creates problems for liquidity. I mean, if we're talking about Bitcoin, that, you know, if it's just sitting on their books and they're not really willing participants within the market, if it's an inflation hedge or something like that, then and people want to transact it, well, the liquidity is being sucked out of it, isn't it?
Well, the liquidity will go in two directions, depending upon, at the moment, more people are wanting to buy it. They've got their story and they're bringing on more and more people. And so, so the idea is, as you bring on more and more people, then the liquidity is there for you. But the idea is, but the liquidity comes and goes, I guess is where I'm saying. And so that's where you can see that volatility part. Is that answering your question? Or not really?
Well, I think it's sort of answering the price implications of it, but I guess actually I was coming more from the trust side of things, where if you have institutions on the books and they're holding it as an asset for whatever reasons, and they're unwilling sellers, then you have less liquidity in stock, and so it goes against kind of that trust story, is that people being able to trade it easily when they want to.
Yeah, look, I think if the story gets out, if institutions genuinely start adding it as an asset, and there's lots of stuff out there talking about correlation with other things and how it's all these pitching all these benefits to it. But if they can actually sell that story to institutions, then this thing could fly. Like there's and there'll be way more money. I guess what I'm saying is, if institutions come on, the size of the pool will go up 10 times, and so
it'll be worth more. So,
they'll be worth more, and there'll be more liquidity. That'll come. But it's really that story, because in the end there's nothing backing it. You don't have you don't have anything behind it, anything tangible. So really what you have is this story, and the story's been really good, and they're very good and very adaptable. That's the main thing, is the story just keeps adapting to here's a new one. Now the latest, as I said, we went through this whole gold part where it's the digital gold, and now we've got this latest institutional involvement part. And that's gonna, if that's true, and that's driven it so far, just the story of it, but if it actually becomes true, self-fulfilling in a way, then Bitcoin could really fly.
Yeah, I guess I wanted to dive a little bit deeper into this idea of institutional involvement, because I've seen in the news this week both Morgan Stanley and JP Morgan talking about the upside they see in Bitcoin. And I was a little bit alarmed when I saw them, because I was thinking, as a layperson, if I hadn't been involved in finance, for nearly 15 years now, I would sort of see those sorts of reports from such huge global banks almost as stamps of approval of the investment. But I feel like I need to say that they're investment banks trying to peddle a story that will get them a trade. I mean, I guess they don't trade Bitcoin themselves, but I worry that that and institution, there's reports of institutions being involved in Bitcoin. They wrongly send this signal to people that therefore, this is investment grade. I mean, maybe it is. I don't know the answer to that, but
well, I mean, gold has been called in the past, the ultimate greater fool asset, in terms of it being, you need to find somebody else who wants to buy it. There's gold has industrial uses and it's got jewelry uses, but they're like a fraction of the overall investment part. The whole idea is it's got value because I can find somebody else who will pay more for it.
Okay.
And the argument is that, well, now I've got a more ultimate greater fool argument. I've got something that's a you don't even have any jewelry concerns about it, or any physical tangible worries about it, because it's all in the ether.
Well, it's like the technological evolution of gold. Sort of so much now we're seeing normal businesses, if they add a tech slant to them, all of a sudden they're worth 10 times as much.
Yeah. So from that perspective, that's your real. What you're basically saying, if you want to buy Bitcoin, you're basically saying, will this story hold up, and will it attract more people to believe in the story? Because that's in the end all it really matters for this. And if you can get institutions believing the story, and maybe they might, there's certainly a lot of them looking at it in more detail at the moment. Then that's where the sky's the limit comes from, in terms of the talk. If you can, but it wouldn't take, at a certain stage though, it actually becomes too big to be, once it gets to a certain certain size, now it becomes a threat to central banks and to governments who actually quite like being monopoly issuers of their own currency. And so this is your issue here, is that if you're the US government and Bitcoin, all of a sudden there's more people own Bitcoin than any other asset, is all of a sudden your ability to influence the money supply and to tax people and all these other things starts to become under pressure. Well, then you start looking and saying, well, now okay, so we ban the use of Bitcoin for financial transactions in the US. And so it's almost there's a period where you can see that Bitcoin, before it becomes too big, that it can be that it actually does attract the attention of people who are worried about how the financial systems actually need to work, and who do worry about that, X% of the world's energy sources are just going into useless work to justify the mining of these coins. Until that actually attracts attention, then there's a story to it. And can the Bitcoin story beat out the story of other cryptocurrencies? Then, probably, yeah.
Apparently.
Yeah, absolutely. So all very, very much about this story. But we've had a few questions actually. Do you want to maybe?
Sure. A lot of comments. One of the questions though was if you were confusing mining versus transacting. So do you want to actually just explain what mining is? Because I had to look it up yesterday, and before that had no idea what mining was to Bitcoin.
Yeah, so the mining part is where you're creating new Bitcoins. So this idea that they want to keep the supply of Bitcoins is limited, and so what they do is they make people do work to create new Bitcoins.
So my understanding is the work that they actually have to do isn't meaningless in terms of Bitcoin. It's actually what the miners do is they verify transactions. And well, I was on YouTube, so I'll caveat my next comments with that. But it explained to me that a transaction request is almost like a problem that needs to be solved. And so whichever miner managed to solve it gets the currency. And then, as you've said, there's a set amount of Bitcoin that will be released over a certain period of time. So the more transactions you have, the less that each transaction is going to, the confirmation of that transaction by a miner is going to earn that miner.
Yes.
So yeah.
Yeah, and when I'm saying useless, I guess it's in the sense of we've created a hard way to do these transactions in order to make it more difficult, and so you can limit the supply. Yeah, saying if your idea was saying, I guess what I'm saying is, if you're designing a new currency and you said, okay, I want to have something that's going to transact, and so people could be buying and selling things right around the world and transacting in this currency, your first step wouldn't be saying, well, and I want to make sure that this. Yeah, if you had a choice between two currencies, one that used a fraction of the world's energy supply, and the other one used 0.2% of the world's energy supply, even when it's at a small level, you say, well, why don't I go for the one that's actually not going to require all that extra work just to transact? Because that's that's an inbuilt. It's inbuilt the problems and made the problems harder, so that it's harder, so that it constrains the money supply. Okay. It's not done because it's difficult. It's particularly difficult to verify transactions. It's put in this extra part there so that it makes it harder to mine and constricts the money supply, which is one of the which is both it's one of its features, is that the money supply won't grow, and so therefore it's a protection against inflation. But the cost of that is when they're designing it, I don't think they sat and went, okay, what happens if a third of the world starts using it? And
they didn't think big enough.
No, that's right.
And then a lot of other points that on the chat today, so thanks everyone for them. But if I was to summarize them, and I was actually going to ask to do this before, I feel like we need to step back a second here, because I feel like between us it's been quite a bearish conversation on Bitcoin and cryptocurrency. And, I think we don't necessarily want to, in this podcast, make a decision for you or for anyone on whether or not we think that you should be investing in Bitcoin, but really maybe how you should think about it. And so I guess if I step back and sort of think about everything you've said, Damien, I'd start with, okay, cryptocurrencies are just a way for me to make a payment to you or to anybody using a non-central bank denominated currency. So it's just a way to make a payment over the internet. That's what it is.
Yep.
And then, so Bitcoin is one type of cryptocurrency that you can use to make payments to each other. Some of the reasons people like it is because it's outside central banks. And so, how do I describe this bit? There's that sense of not participating in the regulation that comes with using currencies that central banks issue.
Yep.
Okay, so, and the reason I really wanted to focus on what exactly is it, because I think it's really important to then thinking about how you value it, and therefore determining whether or not you feel like you want to be buying or selling it. So it's just a means of exchange. And so if you buy a Bitcoin, you're not buying a share in Bitcoin, the company that runs Bitcoin and issues Bitcoin. So you're not going to benefit from them making money. It's similar to I guess metals in the sense that you're betting on whether or not the value of it will go up and down. But then, as you said with gold, it's different because it doesn't have the industrial uses for it, that you can therefore say, well, what's the supply and demand going to be? And therefore, what's the price going to be? So I guess what I'm trying to get at, and I think you've done it much better over the last little while, but is to summarize that it's not actually really representing anything of value. It's just, it's the value of a cryptocurrency is simply what others decide to assign it. And that's why we've really talked a lot about the importance of in Bitcoin of their story and their marketing stories, because the value of it depends on what others decide to assign it, or their willingness to buy and sell it from each other. They need people to, I guess, want to buy it, to think that's a great story and want to buy it. Does that sort of summarize what you've been trying to say?
Yeah, absolutely. I keep coming back to this thought about private currencies versus public currencies. If you think the governments of the world will be happy to have very large private currencies, challenging their own monopolies, then Bitcoin's a long-term buy for you. I think there's a certain stage where Bitcoin will get to.
Why is it a long-term buy?
Well, because at that stage you're basically saying that governments are going to let go of the money supply to private entities. I don't think that's going to happen. I think at a certain stage where Bitcoin gets to, it'll be big enough that central banks will basically say, we're losing control of our money supply. We don't want to lose control of our money supply. We're going to step in and act. I think also that so that's one part, this public versus private. But you've probably got you've probably got a bit of time between that. Like it's probably, who knows when.
I wonder if is it possible that gets out of their control? Like actually that it grows so big so quickly that they've lost the point at which they can actually regulate it. Yeah.
Yeah, and that's the argument I've heard from some people, and they're talking about institutional involvement. It's basically once institutions get involved, then they won't be able to stop it because institutions will own enough of it that people's pensions will be in there and things like that, and so they won't be able to without the people uprising. I don't buy that story.
Well, actually, also on this idea of uprising, I thought it was interesting the story of the NFL player Russell Okung that has taken half of his $13 million a year contract in Bitcoin, so he has to get paid in Bitcoin.
Yes.
And digging a little bit into that, like his reasons for wanting it were basically about not wanting to support the current structures in place that favor the few and the existing rich and encourage inequality. And he has been a big proponent of Black Lives Matter and that sort of thing. And, you can see in the NBA players as well supporting those sort of things or those sort of causes. So, I'm not saying that single cause could cause it to grow really quickly and be beyond regulation. But in terms of uprising, it's an avenue.
Oh, well, but that's what those are the stories which I think is why I can see that why Bitcoin's made it to where it's got today, because the story's just been adapted saying, you know, I don't like the existing system,
Yeah.
and so therefore I'm going to use Bitcoin. And it's like, well, why Bitcoin? What's so special? Why is Bitcoin like the master of freedom? And why is Bitcoin going to fix all these problems? And you're like, well, it's not, but it's almost a but Bitcoin's managed to change its story so that people can say, well, if you hate the man as well, then buy Bitcoin.
Mm-hmm.
And
But I
and
mean,
that's the
that
part
can be
which
really, I think that's a really interesting point, especially with respect to US politics, because it speaks to both sides of the political divide at the moment.
that's right. You hate the
But
Republicans,
also the
buy
thing is
Bitcoin.
that,
You hate the Democrats, buy Bitcoin. Yeah.
we've seen that it's, these sort of things are really emotive. And I was actually listening to an interview Russell Okung was doing about his choice to do this and how he was telling his teammates about it. And he was saying, Bitcoin to me is freedom. And he was like, that as soon as they hear that, they're sold. They want to be involved in it as well. And so when you start talking to people like that, who cares about rationality? We know
Yeah.
that rationality is not the central tenet of investing and that sort of thing. And that's why we think actually active management can add value to investments, because markets aren't actually rational that often.
Yeah. And so yeah, so I guess it's the power of the story, isn't it? So if you've got an asset that doesn't have any backing or anything behind it, then you need to have the best story. And Bitcoin has got a really good story. And
Yeah, exactly.
the institutional part, I wouldn't underestimate that as well. Like look, I'm very dismissive of the whole concept and what it means and all that type of stuff. But you could make the same arguments against gold for 1,000 years.
Yeah,
So,
absolutely.
so gold as a mineral is very useful, like way more useful than copper, but not like so gold sells for thousands of dollars per ounce, whereas copper sells for thousands of dollars per ton. Like there's just a dramatic difference in the cost there. So even silver, which is pretty close to gold, sells for tens of dollars per ounce as opposed to thousands of dollars per ounce. And so it's the story behind it, that if you can get the story right and people believing in it, and the reason why gold works or has worked in the past is because people have believed that story for tens of thousands of years, that it's worth way more than silver and worth way more than gold. So way more than copper. Now, now the question is, can Bitcoin reach the level where people just intrinsically believe that Bitcoin is worth this and will always be worth it, and so therefore people should always buy it? Maybe it will, maybe it won't. I don't know. I can see this next level of belief, though. If they can get the institutional belief, there's a huge leg up. I hope they don't, and I don't know whether they will or not. Like, I certainly wouldn't be saying that this is an asset people have to own in their portfolio and it's going to provide them with great long-term value.
This is something we
But
could be owning.
it's not something I'm allowed to buy, and not something I ever want to change the mandates to buy in our portfolios. But I can see where, if they can get institutional involvement, then it's going a lot higher.
So if you're as an investor, you want to buy some cryptocurrency in your portfolio, how should you think about it in terms of your portfolio construction? Should you be going everything into it, or half of your money into it, or
it should be very much treated as a speculative asset, and very much treated as if you don't money that you don't care about losing, I guess. It needs to be the money that we sort of treat things as a core and satellite. So we say that should have a core set of investments that are low risk and high quality assets that you're confident will provide a good income stream over time. And then around that, you can then sort of buy some more speculative assets.
more risk?
More risk around that. And for some people, that core part is almost all of their portfolio, and for other ones, it's half their portfolio or whatever, and they've got a lot more speculative assets. But this should very much be at your speculative assets, and I would very much suggest don't put anything into this that you're not prepared to lose. And it's worth noting as well that the exchanges that you buy through, they're not regulated either. And so if they decided to, if there is a bit of a run and you put an order in and they decide that one of their friends they'd like to get one of their friends in and their own money out before they get your money out, then there's no one you can appeal to on those ones. So you certainly don't want to be the last one out. Yeah.
So on that, I guess that point, we have a question on the chat. If Bitcoin's in a bubble, do you any thoughts on where it is on the bubble curve?
No,
It's a tough one.
Yeah, look, it's certainly look. My guess is that absent the institutional involvement part, it's way closer to the top of the bubble than the bottom. Having said that, though, if it can convince institutional investors that it is an asset class that they need to include as part of their portfolio, then these stories of can it go to hundreds of thousands of dollars are probably true.
Okay.
I struggle. So I personally struggle with it. But maybe the institutional market is, maybe they'll find enough unsophisticated people that do buy the story that then lead to it getting big enough that others pile in. I find it hard to believe, but there's other stuff I found hard to believe that's happened, and it's if it's a betting on humans blowing an irrational bubble, you can never bet against that happening at some stage. And so I'd say it's already an irrational bubble, and if they can get institutional involvement, then it's going to get even more irrational.
Okay. But the same you would say for gold as well, right?
Yeah, gold's and gold I treat very much as a similar type of asset. The difference with gold is, you've had thousands of years where people have treated that gold that way, as this store of value, and so it's got a longer time frame of that. You've got central banks already buy, and governments already buy gold. They already have big holdings of gold themselves, so they're not but having said that as well, that there have been certain times over time where governments have confiscated gold, and even within the last 100 years, you sort of hit stages where, or maybe the last 150 years, certainly within stages where big governments like the US and a place like that have banned the use of gold for certain transactions.
Okay.
Or so I guess gold's got a much longer and much richer history of playing this role, but again, it is still that. It's still a story. It's about the story about gold, and the biggest, by far, the biggest users of gold are investors and central banks, and both of those are holding it for effectively speculative purposes. So again, gold is largely about thinking that the story is good enough that there'll be somebody else who wants to pay a higher price for it in the future.
Okay, thanks. Another question. So Damien, from your perspective, how do you think central banks and governments could take action to defend their currency monopolies? What do you think is on the cards?
Oh, just banning the use of crypto.
How do they regulate that?
I don't think
is that the right word?
Yeah, look, part of the issue will be once if you get somebody who comes out and says, okay, there's a ban on using Bitcoin within a country, you're not allowed to use it or whatever within that country, is that's going to be enough to clear out a stack of demand. Let's say it's the US. So just people who are like, there'll be people who want to circumvent it, obviously, but if there's a broader mandate from governments to do it, they'll find a way, I suppose.
So does that mean institutional investors won't be out? Potentially institutional investors won't be able to invest in it. Like, if you're a big institution and the government of your country said,
absolutely.
use it.
Okay. Yeah, so then they'd be forced to just, we're going through this process at the moment where the US is on again and off again about whether you're allowed to buy Chinese stocks on the US stock exchange.
Yep.
And there's a couple that I think they're back on now, they're kicking a few out, and they're contemplating whether some of the bigger ones are. So saying that you're not allowed to own to trade Bitcoin within that similar type of thing is not a huge step. I think I don't think there's a lot of legal issues that have to do it.
Okay. Yep.
And
Okay.
so it would,
Pretty.
in terms, as I said, in terms of regulating it would probably be difficult. And there'll be people who might want to sidestep it and always be able to do it, and they probably could. But if you're relying on institutional involvement, or the fact that there'll be a bunch of people anyway who'd go, oh well, if I'm not allowed to own it, I may as well sell what I've got and I'll go, I'll go do something else.
Sure. Right, yeah.
Is actually, yeah.
And what about last one maybe before we go to wrap up? PayPal are potentially going to allow customers to transact using Bitcoin. Does that is this like another leg of the story if we see companies increasingly willing to let their customers transact in it as well as institutions getting on the register?
Yeah, absolutely. It'd be interesting to see. I'd love. Look, that'll be it's one of those interesting tests between saying if PayPal lets people start transacting through it, whether